Welcome back, investors, to Ticker Time News. I'm Adam, and today we're talking about Netflix, ticker symbol NFLX. Netflix stock gapped up over 17% this week after they reported their Q4 2020 earnings that showed strong subscriber growth and record-breaking revenue, both coming in well above analyst expectations, but did fall a little short on EPS, or earnings per share, of analyst estimates. Netflix also gave Q1 guidance that's above the street's forecast as well. So we're going to dive into all of this, plus the three key pillars of Netflix finances, including their income statement, balance sheet, and cash flow. We'll also take a deep dive in their chart to look at their support and resistance levels, their trend line, and whether their 17% gain can hold up or fail to find support. So first off, we're going to start with subscriber growth for Netflix for their Q4 earnings report. And this chart here that Netflix provided, it shows each year the weekly global paid net ads year to date. So you can see 2021 is kind of like on a 2017 trajectory, but so was 2020 until the big jump up, obviously caused by COVID-19. So Netflix reported their Q4 2020 earnings this week, adding 8.5 million new paid subscribers. And this quarter also saw the streaming giant surpass a milestone of 200 million subscribers as the online entertainment business benefited from COVID-19 lockdowns. Average paid streaming subscribers increased 23% year over year in quarter four, while average revenue per subscriber was flat year over year. Now, that's not a bad thing. It's not a good thing. It's just flat. It's stability for the company, but here's why. So this means that once someone signs up for Netflix and they become a paying subscriber, they stay with the membership level that they started with. So they don't downgrade, they don't upgrade. That's stability for Netflix as a company. Obviously, you like to see your customers upgrade their services, but if they're staying flat, that's predictable. You can plan for that. Netflix is also becoming increasingly a global service, as 83% of its new paid subscribers in 2020 came from outside the United States and Canada region. Revenue was 1% higher than their guidance forecast, which was pretty spot on. I don't think you can get any better than that for forecasting. New paid subscribers exceeded their 6 million projection by 2.5 million. Their operating margin of 14.4% also came in above their guidance due to higher than expected revenue. So let's take a look at Netflix's income statement, which they call Statement of Operations, and that just means the same thing. So revenue for the fourth quarter increased to $6.64 billion from $5.47 billion a year ago, beating the $6.62 billion average analyst estimated, compiled by Capital IQ. Earnings per share were $1.19. However, that fell from $1.30 a year ago and also lagged the $1.41 forecast. For the full year, Netflix added a record 37 million paid subscribers, which represented a 31% increase from 2019's 28 million paid subscribers. Netflix also achieved $25 billion in annual revenue, which is up 24% year over year, and grew their operating profit 76% to 4.6 billion. Now, let's look at their balance sheet, and we can see on their balance sheet here total assets of 39.2 million and total liabilities of 28.2 million. This all falls in line, and it's not that big of a difference from the previous years as well. So that looks good. Now let's go and take a look at their cash flow, which has their total cash on hand of 8.2 million. So their cash flow is looking pretty good. There's no red flags sticking out for this. Now, Netflix gave guidance for Q1 2021, and that guidance looks really good. So Netflix expects Q1 earnings per share, or EPS, of $2.97 and revenue of 7.13 billion versus the street's estimate of $2.13 on EPS and 7.03 billion in revenue. It projects paid subscribers of 6 million compared with 15.8 million a year earlier. So they're expecting a slowdown in subscriber growth, but a growth in profits for Q1 of 2021. They did say, though, about the 6 million subscribers they're expecting to add, that they think it's still a relatively big number when viewed in the context of the current global uncertainty, as a record 37 million new subscribers in 2020. So they're taking what happened in 2020, the huge growth that they had in 2020, and they're trying to give a conservative estimate because they're a little unsure about how subscriber growth is going to go, since they had such the big increase from last year, and they've now crossed that 200 million paid subscribers. Let's do a Netflix stock chart analysis. So on Friday, Netflix closed at $565. That's a very important price point, and I'll touch on that in a moment. Their market cap right now is $249.68 billion. This orange line that runs across your screen, this is Netflix's trend line over the past 12 months. So you can see how it's acted as support and it's acted as resistance along the way for Netflix, all the way up until we got to July. In July, Netflix started something. Once Netflix reached its all-time high right here, it began to consolidate. Now, once it started to consolidate, look at the blue line that runs across the bottom here. The lows for Netflix started to get higher and higher all the way along the line. Now look at this blue line up here. This is resistance, okay? The resistance level for Netflix continued to fall. The highs got lower and lower, and eventually you're falling into this crunch area here where the two lines are converging. Now, when they converge like this and there is minimal difference between the highs and the lows, and they really start to tighten up and come together, one of two things will happen. Either the stock will break out or the stock will melt down. That's your only option. At the end of the consolidation period, it takes a catalyst, it takes good news, it takes good earnings, push the stock up out of the consolidation period. And that's exactly what happened last week when the earnings report came out. The numbers were great, the stock shot up. Now, remember when I talked about the trend line, the orange line? Look what happened. This green shaded area here, this shows the gap up on earnings. over 17% gap up, okay? Look what happened. The stock reached that trend line and then it fell, consolidated along the trend line, and then sold off on Friday, okay? So Wednesday it gapped up, Thursday it consolidated along the trend line, and then Friday it sold off. Now this is interesting. Look at this red line. This red line represents $265. It acted as resistance for the all-time high. It acted as resistance here, and it acted as resistance here. When we draw that line out further, that resistance line is now acting as support. It held up as support for the gap up on Wednesday. It held up as support on the consolidation on Thursday, and it acted as support when there was a 2.5% sell off on the stock. It acted as support. So Monday, it's going to be very interesting to see what happens with this stock. Is the old resistance line going to become the new support line at $565? It's going to be very interesting to see. This is a critical moment for the stock. Now that we've gone through Netflix's stock chart, I just want to point out one last thing for their earnings report. UBS upgrades Netflix from neutral to buy on Q4 2020 strength and Q1 2021 guidance strength. I hope you found lots of value in this video today, breaking down Netflix's Q4 earnings report. Leave a comment down below. Are you holding Netflix? Are you looking to get into Netflix? Make sure to like and subscribe. It really does help our channel. We're hoping to grow our channel substantially this year. We really want to engage with our community. I'll see you in the next video.